Onto the markets now. The JSE facing mostly flat global trade with Tencent, which influences the JSE via Naspers and Process, which was up. Now, Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, joining us now to give us a quick update of how the JSE is looking in early trade. Mr. Thulare, good morning to you and Happy New Year. I haven't spoken to you in a while. Let's start with the Rand. It's had a roller coaster week, so to speak. Give us your sense of how the performance is in early trade.
Good morning, Cody. I suppose obviously being the last Friday of the month, the Rand is struggling somewhat after less than expected interest rate increases from the Reserve Bank locally yesterday. I mean, things such as the electricity constraints, which has been obviously the key word, and obviously load shedding, whichever one you want to call it. It's been the theme for the past couple of months, and obviously the weak global growth, the lower commodity prices, and also a depressed sentiment globally is obviously resulting in a weaker growth outlook. And I think this is obviously expected to dampen the inflation pressure down the line. And I suppose this is why we've seen the Rand stuck in a somewhat 16.90 to 17.30 range for the past few weeks. Look, there's still a lot of event risk underway for the Rand, and obviously it is still going to be very volatile. I think if you think about the 1st of February, we still have the US interest rate decision there. There's still the Chinese COVID numbers that we're still monitoring from a global perspective. There's also the potential ANC cabinet reshuffle. I mean, there's been so many rumors on that front in terms of the local politics. And then also we do have President Ramaphosa's State of the Nation address also in the first week of February. And then after that, it is the finance minister's budget speech in Feb. Combined by this, I mean, this is obviously the other key thing that globally we have been monitoring, but it has fallen off the radar somewhat. It is the ongoing Russia-Ukraine tension. So obviously all these factors are also going to play through into the Rand. And I suppose this is why at this point in time, we are waiting for some sort of direction. And I think next week with all these key event risks coming to the market, we will get some sort of direction.
Yeah, let's talk commodities. Gold prices holding steady as investors await that U.S. inflation data. Your quick outlook of how things are looking when it comes to commodities.
Look, gold has slightly somewhat retreated. I mean, especially after US GDP numbers remained strong. I mean, that is now diminishing expectations that the Fed could potentially shift towards a rate cut anytime soon. I mean, gold has rallied in the recent weeks. It has touched a 9-month high on the bet that the central bank out in the U.S. may cut rates later this year in the face of a weakened economy. The numbers from yesterday are obviously showing somewhat something different. But now also what we're seeing is also the holdings in gold exchange traded funds have risen in the past few days. Now that's a sign that investors are beginning to back the rally in gold. And I think, if anything, as you say, investors will now be looking for more direction from the Fed next week when it concludes its monetary policy meeting on Wednesday, and obviously what their direction and their sentiment in terms of interest rates for the next 11 months of the year will be. And obviously gold will take its direction from there as well.
Let's then talk about this. South Africa is said to have lost over 20 billion rand in coal exports, and it's all thanks to the woes taking place at Transnet. Now, this same company has now issued a dollar bond under a new 6 billion program. Help us make sense of all of this.
So look, I think if anything, coal exports, which are processed through the Richards Bay Coal Terminal, they've exported about 70% of the coal that left South Africa last year. That is down from 59 million tons in 2021 and 70 million tons in 2020. Now, the decline there has been as a result of the cable theft and also the lower availability of locomotives, which has disrupted the Transnet freight rail, which obviously rails the volumes to the terminal. Now, this is at a time when coal export prices have risen by about 400%. Now, remember that the RBCT out in Richards Bay is owned by the likes of Sasol, Tungela, and Exxaro. Now, at their results presentation yesterday, RBCT had said for this year they're budgeting to increase export volumes to about 60 million tons. Now, there's two major events that have hampered Transnet operations in 2022, which was obviously the derailment of the coal train out in the North Corridor in November, which resulted in Transnet declaring force majeure, and also a strike by Transnet workers in October. Now, Transnet is planning to issue this dollar-denominated bond to fund the debt repayment obligations, as well as increase their general capital and operational capacity, and obviously increase their working capital. Now, if anything, the disruptions by the cable theft and also the strikes and the prolonged underinvestment means that the local miners are not able to make full opportunity to increase their coal exports to benefit from the high global demand and prices, and obviously that also factors through international treasury, and obviously this means just a lower tax revenue for them. And obviously, if you think about it, that has helped South Africa somewhat, especially with Minister Kodongwane saying, look, the money that's coming through from the sales that we are seeing from the likes of Sasol, Tungela, Exxaro, and also the other people that use the RBCT, that actually is something that, can actually put a stop to the fiscal hole that we do have in our budget. So it is a bit of a problem, and I suppose with Transnet going to the market to look for funding, hopefully this will alleviate some of their problems.
Let's conclude with Toyota South Africa Motors, which says it intends to manufacture electric vehicles in South Africa and export them to the global market. Question is, are electric vehicles the future?
Look, I think if they're intending to manufacture these EVs, and I think that's the other thing, they want to export into the global market. And I think what's crucial is obviously government locally finalizing their new energy vehicle policy. Now, if you think about Toyota, I mean, 44% of their exports is exported to Europe, and this is not a market that they can afford to lose. I mean, if you think about the intention to produce these EVs in South Africa and then export them to Europe, it comes on the back of the emission standard announcement that was made in Europe that all cars and vans sold in the European Union must have zero carbon emissions by 2035. But if you remember, now in November just last year, the European Commission has said, look, they're going to be implementing stricter emission standards, and they've now proposed that this should be effective from the 1st of July 2025 on all cars and vans sold in the EU, and by July 2027 on all heavy-duty vehicles. So that actually shows you that there is a market for them, and I think if we do get our ducks in a row, it will actually alleviate some of the issues that we have in terms of the local manufacturing and also the automotive and logistics sector. But the beauty about it is that despite the floods that we've seen out in Durban and stopped production for more than 100 days, Toyota has retained its market leadership position for the 43rd consecutive year. So that just shows you that if they actually continue, we get more electricity supply, and obviously the red tape in terms of the structural reform, in terms of making sure that this new energy vehicle policy is implemented by government. I mean, we are expecting to hear that from Minister Kodongwane next month in the budget. I think if these things come to the table, then Toyota will certainly benefit from all of these.